Only one word to describe the financial markets in 2016, ugly. Carnage started Monday with big drops in the Dow and the S&P 500. Fears of a Chinese recession got things rolling, and things have only worsened. The U.S. markets have now had their worst first 4 days ever. So let's see what's going on. Joe Cryer, president of Cryer Wealth Management, back here on the morning show.
Hey, Grace.
Joe, the sledding is still treacherous. Little light at the end of the tunnel. The Shanghai index closed up today. Is that encouraging for U.S. markets when they open at 9:30?
It is. You know, we're finally seeing some stability, and markets want to kind of ease into a new year and just kind of get started, get their coffee and get things going. This way, they took a sucker punch on the way to the office, and it's been a heck of a week.
Let's look at the forces at work here and what's driving the markets down. Of course, you've got China, but there's some other things as well that are in the headlines.
Yeah, I mean, it started off with Saudi Arabia and Iran having some conflict and basically kicking each other out of their embassies. And that spilled over a little bit with, of course, the North Korean bomb test. But China's the big story here. You know, their markets have been volatile. They're down 40% over the last 6 months. And the policymakers are trying to do things to manipulate the economy and the market, and they're simply not working. They're just creating more panic.
And falling oil prices are a big factor, too. I mean, we sit back and go, wow, I saw gas at $1.79 a gallon today. This is fantastic. But in a broader economic picture, maybe not so.
Yeah, it's sort of a good news and bad news scenario here. You know, the U.S. energy industry basically kick-started our economy out of the crash of 2008, and now that industry has been shut down by about 60%. So while it's good for consumers to pay less at the pump, as you mentioned, there has to be some balance, and it's taken the economy a little bit of time to adjust to all those jobs that have been lost in that area.
Now, we had a similar situation back in August, I think it was, when China tried to devalue its money. Is this August all over again? And no one knows where the bottom is. So what do investors do?
Yeah. Well, as Jen mentioned earlier, don't panic is the first thing. And you know, for me to say I know what the market's going to do on any given day, week, or month is silly. But I don't think this is August all over again. August, we had a situation where the market was sort of sleepwalking for 6 months, and then all of a sudden bad things started to happen. Now we're in a situation where the market's been chaotic for about 5 or 6 months, and it's just digesting new information every day. That's not necessarily a bad thing. It means, okay, we're not asleep anymore. We're awake. We're looking at these. And I think as the week progresses, we're going to digest this and say, well, maybe this isn't as bad as expected.
And it's certainly not 2008. We should point that out as well. Do you expect a significant rally as investors buy the dip?
It could potentially happen. Actually, there's a big number coming out in about 45 minutes is the December jobs report. Yeah. And that's expected to show an addition of maybe 200,000 jobs to the economy. And even if it's not that good of a report, it's going to remind people that in spite of China slowing down, Europe slowing down, Japan slowing down, the U.S. economy is slowly growing. And in my opinion, that's better than growing rapidly, because when you go rapidly, there has to be a reset, whereas slow growth allows us to digest the growth and hopefully keep it going.
Stabilizes the foundation.
Definitely.
Joe, thanks very much, and Happy New Year, by the way, since I haven't seen you.